It's Wednesday evening, and that means that it's time for the weekly swing trading video. Hello, traders. It's November 18th. We had quite a bit of selling today in the market. Don't read too much into it, at least from my perspective, and I'll tell you why in a few minutes. If you're watching this video on YouTube, I post this to my members Wednesday evening, my one option members, and that gives them an opportunity to get into these trades Thursday morning. Then I post it to YouTube Saturdays. Stick with me here because you'll be able to take a look at the entire process that we go through to find these trades. So there's lots of great educational content, and you have the benefit of hindsight. So you can see the trades that we were doing, and you can take a look back over the course of the last couple of days to see if they played out or not. You can obviously take the 2-week free trial also, and then you can see these actually unfold on Wednesday evenings along with us. But we had a nice round of selling today, and it was a nothing burger of a day to start off. So let's go back, take a look at the daily chart here. We had this very big breakout a week ago Monday on the Pfizer news that they had a vaccine, and you can see how the market pulled back the entire day. Why would it do that? That was fantastic news, and there's finally some light at the end of the coronavirus tunnel. Well, that's the problem, is these news vaccines are coming out about as quickly as the virus is spreading. So there is good news, but right now we're talking about major metropolitan areas and states shutting down. That's not going to be good for Q4 earnings. We've already seen Q2 was weak, Q3 was weak. Now we have to wait for another quarter. Yes. But to this point, investors have been relatively satisfied hanging on to stocks because investment alternatives are few and far between, with bond yields producing negative real returns. Bond yields don't even keep pace with inflation. So, what else are you going to do with your money? You might as well be in the stock market. And like I said earlier, there's light at the end of the coronavirus tunnel, hopefully by Q1, we start to come out of this and we've got lots of pent up demand. That's what everybody is banking on right now. The stimulus bill, you would think that everybody was very eager to have that. The market's somewhat okay with it not being agreed upon already. Politicians really need to get their act together because there are a lot of small businesses and a lot of furloughed workers who are hurting. So, in any event, we have this big sell off. We spend the next week trying to recover that candle right there. And it looked here, we're already through the prior high there. That was a good sign. And this was Monday. So everything looked okay. Tuesday pulled back a little bit, started to fill in this gap. Today was like, where did that selling come from? Early in the day, we were trapped within the prior day's range. There's the prior day's range, high, low. We're muddling around in the middle of it. We got mixed green and red candles. There's really nothing going on. And then once we take out the low, then we start to see a wave of selling. Now, the fact that after making that low, we saw this type of drop, that was not particularly good. But it looked like we're going to bounce in here. Look at that big green engulfing candle right there. There was support here. There were buyers here, but the selling pressure was heavier, took out that low, and then in the last half an hour of trading, look out below. I think that this selling right here was all program generated, sell programs feeding on each other. So I'm not going to get too overly worried about it because the daily chart still looks okay. Now, we're not going to see a decent rally tomorrow, Thursday, until the downside has been tested. So for those of you who are day traders, if you see an early gap open tomorrow, Thursday morning, don't buy it. Do not buy it. We're going to start to see the market pull back and test the lows from today before we start to move higher. So we've got this horizontal support level, used to be resistance, now it's support, comes into play right around the lows right here. So that's at 351.26. I'm looking for these levels in here to hold. Just call it SPY 350. I think that level is going to hold. We're coming into a holiday. Those tend to be fairly bullish for us. We have year-end buying. So I'm not overly concerned. In fact, I'm hoping that tomorrow we do test maybe 351, 352, that we've got a nice little pullback because that's going to give us a chance to get into our bullish put spreads this week. So let's take a look at what our current positions are doing. We've got a number of them on. The only trade that we weren't able to get into last week was PINS, and that stock took off on us, which is good. That means we picked well, but we weren't able to get in. It kept going higher and higher. When we didn't get filled by Friday's close, we canceled the order, but we did get filled on the other 5 trades, and they actually look quite good considering the market action. Here's the Apple spread, and you can see we're below that 50-day moving average was our short strike price. Apple is compressing. It held up really well today given the market backdrop. HLT also pretty decent. We're way down here on this breakout here. This is a longer term option play for us in December, which incidentally, the recording came out and said to sell the 95, 92.50 bullish put spread on Hilton. And then I sent an email out saying, no, let's do the 92.50 90 bullish put spread for that same 50-cent credit. And I did that because I could see that the stock was dropping. So please make sure to check your emails Thursday morning before the open so that you can see if there are any updates that have been posted, then you can adjust accordingly. So what should you do with your spread? Regardless of which of the two you're long or short, I should say, if you're short the 95, 92.50, stick with it. We're really looking for this $95 level to hold up. That was the plan for both spreads. I just felt that we could get the same credit and go one strike further out. That's why I did that trade. But HLT looks good. Yes, held its own today in a wicked market. Qualcomm, really nice. Look at the strength here. In fact, it was up today. It was really starting to go before the market rolled over. And you can see here on this chart, that's what Qualcomm was doing before that market drop. Yes, it did participate in the market drop, but it's still in good shape. We want this gap right in here to hold, and I believe it's going to. So another decent looking trade. SPCE, another really nice one. We sold those puts down here below this major support level. Look at that stock go. Love that one. Really nice. Now here's the problem child. TWLO. Geez, the stock is all over the place. It moves 10 points in a day, so it's been a little bit of a tough one for us, but we're right above that 50-day moving average, which we are leaning on. We are short that 275, 272.50 bullish put spread for 50-cent credit. I'm going to be monitoring this. I'm going to be monitoring the market tomorrow. I think it's going to expire, but your standing instructions for any spread once you get into expiration Friday is that you have to check that spread 5 minutes before the close. If the stock is below the strike price, you must buy the spread back. At very least, you have to buy that short put back. But you should try and exit the entire spread, especially if the long side is close to the money, because if it ticks in the money, some brokers will auto exercise you on that. So the long and short of it is exit the spread if the stock is in the money just before the close Friday. I still think this spread's going to be okay. If anything changes, I will let you know. So we've got those 5 spreads on right now, and we're going to look to add to our spreads pretty aggressively. I want to take advantage of time premium decay. Next week is a holiday. I'd mentioned that there's usually a bullish bias around holidays. We have that working in our favor. We also have trading activity is going to really slow down. It'll come to a screeching halt next week. And that's great for premium sellers because usually the ranges, the intraday ranges, will also compress. So we just want to do what we always do. We want to find stocks with relative strength, stocks with heavy volume, stocks that are breaking out through horizontal resistance, and we want to sell out of the money bullish put spreads on them. We want time premium working in our favor. We're going to try and stay inside that 3-week window so that we can constantly evaluate the market. So let's take a look at some bullish put spreads. Doesn't get much easier than this. I'm going to go to one search. Click on scanner, click on heavy buying, and there's my list. Now, if you are an option stalker member, you will not have this list available to you because this search is not available to you. But You can run a number of other searches. Right now, I'm just looking for really good trades. By the way, if you want to upgrade to Option Stalker, I'll tell you that after hours, there are a lot of chat posts related to swing trading. So a number of members really wanted to focus on swing trading after the market closes. So they're going through different strategies. They're taking a look at different stocks. So that might be of interest to you. If you're looking to upgrade, you'll also have access to this heavy buying search, which is one of my go-tos right on the opening bell every single day. I want to see where the volume is and where these stocks are that are breaking out. I'm going to just click through probably the top 6 or 7 stocks here. That's all I needed today. I looked at these. We've been trading them all day. So really, really held up well given the market backdrop. So first of all, Tesla. Tesla is really nice and it has a good tailwind because it's going to be added to the S&P 500. That means that index funds have to accumulate shares of Tesla before they do that adjustment date. So it's going to have people buying it on every dip. Well, that's great for premium sellers because we know there's support for the stock. You can see this downward sloping trend line visually, comes right down like that. And you can see how the stock popped above it on that news. You can also see today that it absolutely took off. Well, I don't want to sell any premium right up here close. I want to give it some room. So I want to come down as far as I can. In fact, if I can get down to this 50-day moving average, that's what I would prefer to do because there's a natural support level right here, even before the news. But with that news that it's going to be added to the S&P 500, I don't think we're going to see the stock retrace very much. So if we get a little bit of market selling tomorrow, yeah, then we could get our spread filled. And that's what I'm counting on. So I'm going to click on trade and we're going to go down to the December 4th expiration. This is 2 weeks and 2 days out. And we're going to go all the way down to that 420 put. So we're going to be selling the 420 put. We're going to be buying the 475 put. We have $2.50 between the strike prices. That must mean that we're going to be trying to get a 50-cent credit for this. And you can see that based on the bid-ask spread that these options are wide. But, and the bid is negative 25 cents bid, offered at $1.50. 50 cents is actually a little bit bid side on that spread. And of course, that's a GTC order. Now, all of the trades this week, if we are not filled by the close of trading on Friday, cancel all new orders. We're selling all of our spreads within a 2-week time frame, so we do not want to be filled next Monday, Tuesday, Wednesday. We want time decay to have already started working its magic for us. And if we were to keep these orders pending until next week, the stock would have to be much closer to the money for us to get filled. We don't want anything to do with that. And I'm going to have 6 new trades for you tonight. So there's a good chance that maybe we get filled on 2 or 3 of them. If we get filled on 4 or 5 of them, we're probably not going to do any new trades next week. We'll have a full complement of trades on, and we don't need to add any additional market risk. At that point, then we just sit back and let time decay work for us. So in any event, that is the first trade. Let's do a quick recap on it. You can see right here, we're leaning on that 50-day moving average for Tesla. We also want the stock to stay above that downward sloping trend line, which would come into play there as well. And we like taking advantage of the fact that it's going to be added to the S&P 500. That should give it some natural buying pressure. We're going to sell the December 4th 420 put. We're going to buy the 417.50 put, and we're doing that for a 50-cent credit. That's trade number 1. So let's take a look at another stock that's on the list. Let's go down to the next one. This is pretty nice. This is BYND, Beyond Meat. You can see how they had earnings after the close right here. Negative reaction. Actually, the next day, this was the bar, and then it had earnings right here after the close. That was the earnings reaction. Stock tanks down below the 200-day moving average. But since making that low, it's been able to grind higher and higher. We also have a major horizontal support level right here coming into play. I like it. I think that gives us two different support levels to lean on, and we can sell some premium just below this 200-day moving average, and we can lean on that. So you can see how it comes into play at 126. Stock is at $134. So we are going to be selling those out of the money puts. Let me bring the option chain back into view so that we can enter the symbol. And we're going to be going out to the December 4th expiration. Actually, on this one, we're going to go to the November 27th expiration because we're closer to the money. I still think we're going to be able to get that premium. The sweet thing here is these expire in a week and 2 days. So if we can get this spread done tomorrow, should bode really well for us. We can bank some money very quickly. So we're going to be selling the BYND November 27th 125 puts, and we're going to be buying the 124 puts. Well, because there's a dollar between the strike prices, we know that we're going to be looking to get a 20-cent credit for this. Well, that spread was a penny bid offered at 32 cents. Actually, it's a negative penny. So we're right in the middle on this spread. We're going to need some help from the stock tomorrow. We're going to need to have it pull back just a little bit. As I'd mentioned to you earlier, I feel that the market is going to test support before it can rally tomorrow. So I want to play into that. I want the stock to come in, get filled, and then boom, the market finds support and it continues to move higher. So, recap BYND, November 27th expiration. We're selling the 125 puts. We're buying the 124 puts. We're doing that for a credit of $1.20. Trade number two. So let's move this away. And let's go down. TGT. I'm just going to take a look at the stock. We're not trading it. This is a really good stock. This was a bearish hammer off of a relative high. That's typically not a good sign that the stock couldn't hold those gains, but realize that we had that huge market decline. Target posted a great number. I think it's going to do well this holiday season, and that breakout right there should hold. That is a support level, so keep an eye on it. That could be one that you want to put on yourself another day, 2, 3 days. If the market starts to stabilize and it starts to climb back into this candle here and above that support level, you can sell an at the money option that expires maybe in a week. Generate some really nice income, but make sure that you have support in the stock. We don't want to see it start drifting lower on the backside here because then that would be a failed breakout. Anybody that bought in here would be dumping it here, and that selling pressure could force the stock down. So be a little careful with Target. That's why I did not include it in the trades tonight, but good strength today. JMIA, and you'll see the double candles because everything's updating after hours right here. JMIA off to the races. Look at this gorgeous horizontal breakout right here at $19. Now, the one thing that you'll notice is when I do look for trades, if I've got a stock that's $19, $15, $10, I'm going to be inclined to sell out of the money puts naked. I want to buy the stock. The reason for that is that I don't have to put up that much money for the naked put because my strike prices are fairly cheap. So why do a credit spread? I don't mind buying some of these cheap stocks anyway. If we get assigned on these, great. We'll buy the stock and we'll turn right around and we're going to sell some calls against it. If the stock continues to move higher and we get called away, perfect. I'm up the put premium that I sold, I'm up the call premium that I sold, and I'm flat the stock. So I love when that happens, and I hope we do get assigned on one of these plays. JMIA looks really good. You've got really heavy volume in here. You can see there's a lot of interest in it, and I like it down in here. Boy, I'd really like it around that $13 level. I don't think we'll be able to get that aggressive with the trade. So we're going to have to look at a higher strike in an area that we would be happy owning that stock in. So I think that based on this, if we can get in somewhere around the $18 level. We're going to try a tricky little trade here. You can see the opening today was just below $18, and if I hover over this bar right here, you can see that opening price today was $17.76. I would love to own this stock around $17.76, and I'd like to own it there in the next 2 days. So if we get a market drop tomorrow and the stock retraces a little bit, it's got pretty heavy option implied volatility in it. So we're going to try and get filled on a very, very short term trade. In fact, we're going to try and sell these puts that expire on Friday. Now you can see the stock only has monthly options, which is kind of a bummer, but I'm going to click on those November 20s, which expire Friday. And I'm going to go down and we're going to take a look at those $18 puts right there. And we're going to try and get 20 cents for these. So I'm going to move this up. Yeah, but Pete, they're 15 cents bid offered at 20. I know. If we get a market pullback, they could be 20 cents bid tomorrow. We are going to sell these $18 puts, no stop. That means if the stock drops, pulls all the way back down here, we are going to own it. Now, this is a 2-day trade, and if you look at this and figure, let's just use round numbers. Let's say that it's $20. We have to put up 20% of the strike price. So roughly, we're putting up $4 per contract on this, but we're getting 20 cents. So that means that we would make 5%. Well, that's not a very good return. Well, yes, it is. For 2 days worth of work, 5%. Thank you very much. I'll take it. We're going to try and do this trade. So let's do a recap on this. Very quick little trade. Maybe we get filled, maybe we don't. We are going to sell the JMIA November 20th $18 put. We're going to do that for 20 cents. No stop. So this one, if we don't get filled on this one Thursday morning, probably in the first hour or two, we're not going to get filled on it. So let's take a look at the next one. We're just going to continue to go right down the list here. See how easy this is? Candy. This is also how easy it is when we're trading during the day. I mean, these stocks are right in front of us. You can't help but see these stocks. So we've got KNDI. I've been long this for quite a while. I loved it back in here, bought it, sold it before earnings. Earnings came out. They didn't like it so much. Came down here, got above the 100-day. I reloaded the stock, sold it yesterday. This stock is off to the races. And I know there's a lot of excitement about what they're doing. They're going to be producing a very cheap car for $10,000, an electric vehicle, and the $2,500 rebate in Texas is going to be applied. So imagine that you get a new car for $7,500. So lots of excitement over this stock, and I like it as well. It's got very high option implied volatilities. We're going to take advantage of that. We're going to sell some premium, and we're going to have to go out to the December expiration because it only has monthly options. And so I'm going to click on the Decembers, and we're going to go down to the $8 strike price. And you can see the $8 puts are bid 60 cents, offered at 65 cents. So in this particular case, we're going to have to put up $1.60 to put this trade on. And, we're going to take 20% of that strike price. So you got to put up $1.60 on this, and you're going to collect 60 cents. So you're making about a 33% return on this naked put right in a 5-week period of time. I consider that to be a very healthy return. If we get filled on it, look where we're going to own the stock, all the way down here at about $7.50. Actually, $7.40. Yeah, I would love to buy it here. Look at all that support coming into play here. You got the 50-day moving average, you got the 100-day moving average, all really nice. So yes, I would like to own this stock. That whole space, the electric vehicle space, is super, super hot. NIO, Tesla, uh, KNDI. There are a ton of other stocks also. So a lot of interest in renewable energy and electric vehicles. That's the trade. We're going to sell the KNDI, and those are, whoops, I didn't click on it. We're going to sell the December 18 $8 put. We're going to get 60 cents for it. I believe we'll be able to get this done for this price or better tomorrow. So let me give you a caveat here. I wouldn't put this trade in tonight, Wednesday night. Thursday morning, you turn on your computer screen, you check to see what the S&P futures are down, and you go, "Oh my God, S&P futures are down 40 points. Candy is down 50 cents." Well, then don't be out there with a 60-cent offer on these. You can raise that, see what you can get. Maybe try 70, 75 cents. This one is one that spans 5 weeks. So we got time on this one. I'm just telling you, take a look at what the market's doing. Don't just blindly go into staged orders tonight and go click, 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 click. Okay, they're all in. Especially with a market move like we had today, where you had heavy selling right into the closing bell. Take a look at what the futures are doing before the open tomorrow. Take a look at what the stocks are doing pre-open. CNBC, you can go onto their site if you don't have it through your brokerage firm. You can see what the futures are doing. You can enter symbols. You can see what they're doing before the open. Gauge what these stocks are doing. Now, in most of the other instances, we're not hitting a bid like we are on KNDI. So the stock has to come in for us to get filled. But on KNDI, because we're hitting a bid here, there you got flexibility to try and get a little bit more. I'd love to get maybe 70 or 80 cents for these if we can. You turn on your screen tomorrow morning, S&P futures are flat, stock is flat. Okay, get the 60-cent offer out there right away. Or maybe in Candy's case, because of the breakout, it could even be trading higher tomorrow morning. Then you definitely want to have your 60-cent order working right away. So my point here is try and monitor what's going on just before the open on Thursday. See if I sent you any emails, see if there are any updates, and then act accordingly based on what you see happening in the market, because we're getting some big market moves right now, right? I don't know what's going to happen tomorrow. I think the S&P futures are about 50 cents off of their close. So there's nothing going on with the futures right now, but that could change. So KNDI, that is trade number 4, and I'm pretty sure we're going to be filled on this one. So let's go right down the list. AMAT had a really nice breakout. I did like it. You got this horizontal breakout right here. You got news after the close right here. Zoom. And the stock has great follow through. Look at that strength even against a very weak market backdrop. I love it right here around that $69 level with the stock up at $75. Couldn't quite get the credits that I was looking for. Any pullback, I think this one comes nicely into play. TJX, another retailer, same type of pattern as Target, rallied up and then pulled back with the market. I'm not a huge lover of brick and mortar retailers. TJX does a lot of clothing. They don't have food and all the other staples to attract customers there during the virus. So I'm not as crazy about this stock. Plus, look at this movement. Choppy all over the place. No, thank you. We can find better. Here's a stock. Nice bowl formation here. Big trough right in there. Forms a beautiful little base. Got earnings after the close. It's able to get above the 100-day moving average right there. There's the 50-day. There's the 200-day. Nice upward sloping trend line. Yeah, I like it. Well, this is also pretty cheap stock. So in this case, we're also going to try and take a look at selling it out of the money put naked. And we can see that the 100-day moving average comes in at 22.80. Let's go below it. Let's go down to the 22.50 strike price. Let's see what we can get there. So we're going to go into the GRPN. We're going to go to the December 4th expiration, and we're going to go down to the 22.50 puts. Let's see what we can get. And here you can see very wide bid-ask spread. You've got a 22-cent bid offered at 57 cents. In this particular case, we're going to split it. We're also going to see if the stock might pull back tomorrow. We are going to try and get 45 cents for this. And if we can, we're going to have to put up about $4.50 for it, 20% of the strike price. So that's about $4.50. If we get 45 cents for this naked put right, that will generate a 10% return for us in 2 weeks and 2 days. And we'll have a chance to buy the stock all the way down here below this 100-day moving average. So the stock would really have to pull back. Well, if we're owning the stock right in here, approximately $22.05, well, that's okay. We're very close to this major support level on the stock as well. Turn right around, sell some calls against it. We're in business. I like these types of plays right now. And, we haven't bought calls pretty much all year. We've just been selling premium. We've been doing it very, very successfully. And then we've had a bit of a dry spell from, I'd say, July, August, September, but now we're starting to kind of get back on track. The reason for that is that we've had a market where lots of volatility could go either way, and buying calls requires us to have a ton of constant upward momentum, especially when we're swing trading. We haven't had that type of predictable market condition in quite a while. That's why we're selling bullish put spreads. And if I go back to the SPY chart, which we'll do a quick review before I conclude tonight, you can see there's really no pace to the market right here. We have buyers and sellers are paired off for a variety of reasons, and the market has no upward momentum. Keep in mind, stock valuations right now, the PE on the S&P 500 is at 40. That's super rich. The only thing keeping this market afloat is the fact that there are not any attractive investment alternatives. And of course, the promise of a stimulus bill, and of course, the coronavirus vaccines coming out. So there is room for the market to pull back, absolutely, as we saw today. But when the market does pull back, eventually buyers start nibbling, and then the market kind of floats back. Not a good environment for call buyers. All the while, you've got time premium decay constantly every single day. I hope that changes for us in 2021, but for right now, this is the strategy that we want to use. We're using probability to enhance our odds of success. So, recap GRPN, we're going to go out, sell the December 4th 2250 puts. We're going to be doing that for a 45-cent credit. Let me click on that so that you can see the trade December 4th, 2250 puts. Only one more trade to go. I told you I was going to have a lot to pick from today. Continue to go down. Hey, look at there. We got WKHS. So, nice, nice momentum here. Got this downward sloping trend line right in here. Going to ignore this bar here. And we've broken that to the upside. 100-day moving average was tested, got above the 100-day moving average, and now it's above the 50-day moving average. All really nice developments for the stock. So I'm going to put in that symbol, and we're going to take a look at those options. And here we're going to be going out to the December 4th expiration, and we're going to be looking at the December 18 puts right here. And we're going to be selling the December 18 puts. We're going to be buying the December 17 puts. And we're going to be looking to do this for a 15-cent credit. Not the normal 20-cent credit, but we're going to be looking for 15 cents. And these cheaper stocks, you're not able to get those big beefy credits. They just don't sell them as readily because the stock tends not to move as much. But you can see on this one, we're all the way down to the $18 strike price right in here. I feel pretty safe about that, especially since we're only in this for 2 days and 2 weeks. And that will still generate about an 18% return for us if we're successful on it. So let's take a quick look at that trade. WKHS. We're going to be selling the December 4th expiration, selling the $18 puts, buying the $17 puts, and we're going to be doing this for a 15-cent credit. So that's all that I've got for you this week. I think I've got a lot of nice trades lined up for you. We have 6 new picks. If you go into the staged order entry screen, you can see them all. And those are all right now down at the bottom. We've got Tesla, BYND, JMIA, KNDI, GRPN, WKHS. So please take a look at what the market's doing overnight. Check your emails. Make sure that I haven't sent out an email or adjusted anything. And if the futures are flat, put all the orders in. If the futures are down big, you may want to hold off on some of them, especially candy. See if you can get a little bit better credit on that. And we'll see what tomorrow holds for us. But I believe the market is going to pull back and test the lows from today before it moves higher. And that plays into exactly what we're looking to do. So that's it. That's what I've got for you this week. Let's see what we can get filled on. TWLO. If that stock is in the money 5 minutes before the close on Friday, you need to close that spread down. So please remember that for all of your option spreads on expiration Friday. You have to go in and you have to take a look at where they're trading. Typically, we're way out of the money on these and you don't need to worry about them. TWLO moves. That stock moves $10 a day oftentimes. So got to watch that one a little bit carefully the next 2 days. But I think we're going to be just fine on it. If something drastic happens tomorrow, I'll send an email tomorrow night with instructions on how to close it down. As always, if you're super nervous about a trade, close it down right now. It's not my trade. It's your trade. Do with it as you feel. You do with it as you will. You're going to know what your risk profile is and whether or not you're comfortable with a trade. So act accordingly. Thanks so much for watching. If you like the content and you're watching this on YouTube, please sign up for the 2-week free trial. Make sure to give this a thumbs up. Also, please subscribe to the YouTube channel and turn on your notifications so that you never miss these videos. Good luck with your trading tomorrow, Thursday. I think we're going to have a busy one. See ya tomorrow. I'll do another video during the middle of the day. Thank you. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.